Hi, I'm Lutfulai Adeyugbe from ARM Investment Managers. Here are the major highlights that shaped the economy and market in August 2025. In August, the National Bureau of Statistics released the inflation numbers for July 2025. Headline inflation slowed as expected, which printed at 21.88% year-on-year, compared to 22.22% year-on-year in June 2025. Core inflation also eased, dropping to 21.33% year-on-year from 22.76% year-on-year in the previous month. On the other hand, food inflation moved higher, rising to 22.74% in July from 21.97% in June. On a month-on-month basis, headline inflation picked up to 1.99% in July from 1.68% in June 2025. This happened despite some moderation in food prices, which slowed to 3.12% in July from 3.25% in June. Core inflation also eased, coming down to 0.97% in July from 2.46% in the previous month. Moving on to the equities market. In August 2025, the NGX All Share Index inched up by 0.30% month-on-month. This was a sharp slowdown from the strong 16.57% month-on-month rally we saw in July. The modest gain was largely supported by strong performance in BUA Foods, BUA Cement, and Transcorp Hotel. This helped to offset the losses in MTN, Zenith Bank, and WAPCO. The early part of the month set the tone. In week 1, the market gained 3.18% week on week on the back of robust H1 2025 earnings and President Bola Ahmed Tinubu's signing of Nigerian Insurance Industrial Reform Act on August 5. Looking at the sectoral performance, insurance sector led the market in August with a strong 44.30% month-on-month gain. At its peak mid-month, it was up as much as 81.73% month to date before profit-taking trimmed some of the gains. Consumer goods followed with an 8.91% month-on-month increase, while industrial goods rose 1.83% month-on-month. On the flip side, agricultural dropped by 3.02% month-on-month, telecommunication fell 4.18% month-on-month. Oil and gas sector declined by 3.95% month-on-month, and banking sector closed lower by 5.09% month-on-month. Overall, the top gainers in August were M-Benefit, which jumped 114.29% month-on-month, Alco with a 91.47% month-on-month increase, and Veracicap up 65.12% month-on-month. On the other hand, the biggest losers were Living Trust down 36.27% month-on-month, NGX Group which fell 22.52% month-on-month, and Dangote Sugar down by 21.09% month-on-month. In September 2025, market sentiment will be likely influenced by release of H1 2025 earnings for major banks and market expectation of interim dividend announcement in line with prior guidance. Lower fixed income yields could also drive investors to shift attention towards equities. Looking ahead, the upcoming 9 months 2025 and Q3 2025 earnings may further renew interest in the equities market. For the fixed income market, in August, the CBN held 3 OMO auction, offering 1.6 trillion, higher than 1.2 trillion naira we saw in July. Investors' interest was strong, with bid totaling 3.93 trillion, although competition was slightly lower than in July. The average bid to cover ratio, which shows how much demand exceeds supply, is to 2.46 times from 3.13 times in July. Stop rate at the OMO auction rose sharply by 249 basis points to 25.42%. up from 22.93% in July, pointing to a tighter monetary condition. In the end, the CBN allotted 3.37 trillion, higher than 2.80 trillion issued in July. In the NTB's markets, the CBN held 2 auctions in August, offering 697 billion naira. Demand was weaker compared to July, with average bid to cover ratio dropping to 1.7 times from 3.71 times. The average stop rate inched up to 16.10% from 15.77% in the previous month. At the end, the CBN sold 477 billion naira out of the total subscription of 763 billion naira. At the FGM bond auction, the DMO offered 200 billion, splitting between a new August 2030 bond and the reopening of June 2032 bond. Demand was weaker, with subscription of 268 billion naira and a bid to cover ratio of 1.34 times, down from 3.76 times in July. The average stop rate rose by 207 basis points to 17.97% from 15.90% in July. In the end, the DMO sold 136 billion naira. Looking at the fixed income secondary market, sentiment stayed bearish in August as auction results drove repricing. Average fixed income price rose by 96 basis points month-on-month to 17.99%, revising the 226 basis point drop seen in July. This increase was broad-based, with the NTB's yield up 111 basis points to 18.88%. The FGN bond yields higher by 80 basis points to 17.10%. Looking ahead, net liquidity inflow of 2.49 trillion are expected in September, slightly above August's 2.42 trillion naira, driven by coupon payment and maturity. Despite this, yields are likely to stay elevated as the CBN sustained OMO issuance to manage market liquidity with attractive rates to retain foreign investors. The DMO also doubled bond auction offers, reflecting higher borrowing needs. At the upcoming MPC meeting on September 22nd and 23rd, we expect the policy rate to remain at 27.50% as inflation moderates, with a tightening bias still evident. Overall, yields should stay higher, with short-term instruments 0 to 90 days offering the best balance of liquidity and returns. Thanks for watching. I trust this provides useful insights. For advice tailored to your needs, reach out to your ARM relationship manager. Stay informed, stay focused, and remember, we remain invested in your tomorrow.